Our next guest is one of my favorites, a financial expert, best-selling author, John Mauldin. I want to welcome you to the George Jarkesy Show. We're glad to have you back on.
George, it's always good to be with you.
It's amazing to me how quickly all the attention has gone to how are we going to raise taxes, and almost no discussion on how are we going to stop spending so much.
I just read a Pew Research poll. They ask people about their views on capitalism and socialism. And what it shows is that a significant portion of the growing part of America are more favorable to socialism in many cases than they are to capitalism. If you can't do any better than presenting a vision of the difference between what a free market does for people in terms of creating wealth and jobs versus what a socialist market does, which is redistributing the efforts of the productive, then we're creating a society that's going to look far more like Europe and in its sclerotic values. What we have is a majority of people who say to us, but John, I want to look more like Europe. And at that point, you can only sit and kind of shrug your shoulders and go, but you haven't seen how this is going to end. And in the next 2 or 3 years, we're going to see how things are going to end with that world. And it's not going to be a pretty end. I was told that France has basically said, we're going to nationalize ArcelorMittal, which is their big steel company, simply because you aren't employing enough people, and if you're not going to do it correctly, if you're going to be closing those plants, we're just simply going to take these from you and employ the people in a profoundly non-profitable industry in France. If you start nationalizing stuff, that is not what makes people who are producers, who are creators of jobs and businesses, that doesn't give them warm and fuzzies. I don't have to choose France to be the place where I locate my plant. I can locate my plant in, pick 25 other countries. France is accelerating down that socialism road, and I think they're going to be the headline in 2 years in the same way that that Spain and Greece are the headlines today. I mean, Europe is not going to go to wait. They'll figure out how to change, but the socialist culture that they've created simply is feeding on itself. It is growing too large to be able to sustain itself.
How do you feel about where we are from a capital standpoint here in America and the way we're treating our own dollars?
We're dealing in an era of financial repression. And by financial repression, I mean the situation where the central bank is artificially holding down the yield on bonds. That means that savers have to look for increasingly risky investments in order to be able to generate a yield in order to live. They want to hold down yield so people will be encouraged to borrow money, to consume, the businesses will be better able to invest. But at the same time, we drive down the return that savers make, which means they have less to spend and they can consume less. So the net effect is smaller. Now, what we've done is we have created a monetary policy that benefits the wealthy, the people, in fact, who have stocks. And it's kind of trickle-down monetary policy. The whole thing makes no sense, but it works in a Keynesian theory world that is a theory. It doesn't describe reality. Keynes can teach us some very, very profound lessons and thoughts, but there are some conclusions that people have taken from his work and driven to the hard edge of theory that it just doesn't work.
There has been so many countries before us that have gone down this path, and yet we're not learning from their
Somehow
mistakes.
or another, we think we're different. 10 people over in Europe say, well, Spain is not Greece, France is not Spain, and it ends up with the one that says Uganda is not Greece. Yes, Spain is a completely different country than Greece, and they've created a disaster that's uniquely Spanish, just like the French are creating a disaster that's uniquely French. If we don't solve our problem in the U.S., we will create a problem in our own inimitable American way. It's called too much debt. And having too much debt is its own consequence at some point. Debt properly used, leverage properly used, can be a good thing. Too much of it, of course, as we all know, is a disaster on a personal level, and it's the same on a country level. There does come a day when bond markets say, we think you've borrowed too much. And that can come for the U.S. My concern is it's going to come sooner than it should, i.e. 2 or 3 years from now, if we don't deal with it, because we're going to watch Europe really hit the wall. And the bond markets are going to look at Europe and Japan, and they're going to realize that in the U.S. may be different than Spain or Europe, but the underlying issue, that of too much debt, is the same. They're going to say to us, guys, if you don't mind, we've seen this movie twice. We know how it ends. We'd like to slip out at intermission. And we begin to lose access to the markets. Now, right now, the academic theory is that, well, the Fed can just buy all the bonds. We're going to find out exactly how that works in the next 12 to 18 months in Japan. Japan has come to the end of their ability to borrow money at cheap rates. The U.S. is going to be faced with insurmountable problems if we don't control our deficit. Much better to do it this next year and not have to learn what would happen if we have to try to solve the problem in the middle of a crisis. That would mean much higher taxes than any of us could ever imagine and much deeper spending cuts than anybody would want to contemplate.
This all heads to a place where we don't want to go, and
this is about families and people and lives.
You can learn everything about John Mauldin at johnmauldin.com.